Hello, everyone. My name is Craig Adler. I am a retired certified financial planner. I'm also sometimes known as the Angry Financial Planner. Today, what I would like to discuss with you is my forecast for future stock and bond returns from the decades starting in 2025 and ending in 2035. There is a very strong and inverse relationship between how much we pay for corporate earnings and what we could expect from future stock returns. In this table that you are now looking at, CAPE 10 is a measure of how much we pay for corporate earnings. And you can see as this number advances from 10 up to 33, our future annualized returns go down from 10.6% to 1%. So with this table as our guide, all we need to do is look at the current value of the CAPE 10 index, and we can use that to forecast future stock returns on an annualized basis for the next decade. When we look at the current value of the CAPE 10 index, it is 38.6. It has only been that high one other time, and that was in 1999. Based on that current value, we could expect future stock returns in the range of 1%, but that is a 1% real return or 4% nominally on an annual basis for the next 10 years going forward. Forecasting future bond returns is much easier to do. The single best guide for future bond returns are the current yield of those products themselves. When we look at the current yield of the total bond market index fund, and I'm using that because it's a good proxy and many of us have that fund in our retirement accounts, the current yield on that fund is 4.4%. So given that information, it appears that the nominal stock returns and the nominal bond returns are going to be about the same at about 4% on an annualized basis for the next 10 years going forward. Now the real question becomes, how should we use that information? Well, for someone that's older or is very close to reaching their financial goals, why would you want to take significant equity or stock exposure when it appears that that equity risk premium that we count on receiving for taking that risk has a very low probability of being received? Based on the information that I am sharing with you today, I would suggest much lower equity or stock allocations for individuals that are close to reaching their financial goals. For younger individuals, I would simply use this information to set reasonable expectations. But remember, before you implement any strategy, make sure you seek the guidance of your own financial professionals. I have created this channel to help improve the financial literacy of everyone, but I need your assistance as well. If you are finding these concise videos helpful and beneficial, please support the channel by subscribing. And remember, when it comes to our money, it is always better to be educated than angry.